Hi, everyone. I've got Jeff Clark and Adam Taggart with me once again. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you. We have some interesting things to discuss today and hopefully some useful things too. So, Adam, we're glad you're with us too.
Same here, guys. Let's get started.
Great. Well, for the article today, this first thing we want to bring to your attention is an article on our website we actually wrote. It's called The Stock Market Crash Prep Kit for Gold and Silver Investors. And this is the reason I wrote this is because this is one of the number one questions we get from gold and silver investors is, hey, if the stock market is going to crash, aren't gold and silver going to suffer too? And if so, should I sell my bullion and rebuy it back then? So this article kind of addresses that. And this chart, as we show here, is how gold and silver have performed during the specific time period of stock market crashes, going all the way back to the mid 1970s. And you can see gold actually fares pretty well. Silver struggles a little bit, but usually actually does better than the stock market. So there's some useful information here, and I give 3 strategies at the end that gold and silver investors can use to kind of prepare for a stock market crash. So, Mike, what's your reaction to this article here and these ideas?
I think you're being very modest. You said that we wrote and you wrote this article. And it's a great article. It's good analysis. One of the things that, it shows how well gold does. It doesn't show silver doing as well. But one thing I want to point out to everybody, all of the viewers, is that this is the spot price that's based on the commodities exchange. And you do mention that premiums soared during this period of time. Now, I was speaking at an event at Marco Island, Florida, when the bottom of the 2008-2009 crash happened. And it was, I believe, in October that the markets, that gold and silver bottomed, and then the stock market did not bottom until the following March. So it kept on crashing for a long time. They both fell, and then precious metals reversed and took off like a rocket while the stock market kept on falling for quite a while. But on the day that gold and silver were bottoming and silver was below $9, it had crashed from 21 down to below 9. And I was putting together my presentation. And one of the things I did was I went to eBay and snapshotted a bunch of gold and silver eagle offers. Now, my hard drive crashed after that, and my backup system, which was this Maxtor One-Touch drive, it hadn't alerted me that it had failed 3 months before. And about 2 or 3 months after this event, my hard drive developed a problem, and it scraped all the material off of the drive and was not recoverable. But I wanted that presentation so bad because silver eagles were being offered at $35 on eBay. I heard from a friend that was an investor that went into a dealership in Chicago, and 100-ounce bars were going for $18 an ounce, while silver was below 9 on the commodities exchange. So all of these, yellow boxes here on silver, most of those, when you're talking about physical, were actually green boxes. And the one green box that says 1.1%, that was, hugely north, because that's the crash that I'm talking about. The premiums just exploded, much larger than what you've got recorded in the article here. But I wish I had this presentation so I could show you the snapshots and stuff. But this is a great article, and it's true. And we have to get ready for what I believe now is going to be just an implosion. And the further they pump this thing, the bigger the implosion is going to be, because there's nothing behind our monetary system anymore. It is air. And you look at what they've done is it's crisis after crisis after crisis. And with each one of those crises, the monetary system goes from something that has some sort of foundation to it to just air. And the Federal Reserve is just this giant fan, this blower that is turning the wind up and down. And then we get to hurricane speed once in a while. But you take a look at what just happened. I mean, Alan Greenspan reduced rates. Ben Bernanke created just a whole bunch of currency, and we haven't stopped doing that. We're still doing it. $1.9 trillion just passed. And then on top of that, there are no reserve requirements. The banks can create unlimited quantities of currency based on loans. They just have to make sure their balance sheets are okay to where they have enough performing loans so that they don't get into trouble. Otherwise, they make up currency from nowhere based on your signature or anyone's signature. And when you look at the levels of debt that the world is taking on, this is just a recipe for disaster. That's my 2 cents. It's a great article.
Adam, what do you think? Sell your bullion because the stock market might crash and rebuy it later? What do you think of that strategy?
I think pretty much the opposite of that. So first off, I was going to say, man, whoever wrote that article, boy, what a brilliant writer. But secondly, I just want to point out the dynamic for folks, and Mark, it might give a quick nod to this, but what tends to happen, especially in these sharp, severe market drops, is that all the players who are long get caught by surprise. And at that beginning, they're getting into all sorts of trouble. And oftentimes they're getting hit with what are called margin calls, where they are forced to cover positions that have been losing value very quickly. And in that case, you're forced to start selling whatever assets you have that have still retained value to meet those margin calls. And precious metals fare quite well at this point in time. And so they start getting forced sold because these guys are just having to liquidate whatever they have. And that usually does bring the price of the precious metals down, but it's usually very temporary until those margin calls start dissipating. And then the capital that's left rushes back into the precious metals for safety, right? So there is this oftentimes a little bit of a dip, but then it comes generally roaring back. And we've seen that in a lot of in several of the past really big price drops. And so what you don't want to do is sell your precious metals beforehand, have this dynamic happen, and you really don't have time to play it exactly. And if those precious metals bounce back up, you're very likely going to be selling beforehand at one price and then buying back in at a much higher price. And that's just talking about the paper part. And then Mike mentioned what happened to the premiums. So you really don't want to put yourself at risk of really missing the great opportunity there. You've got to be positioned beforehand.
Very good point, Adam. That does frequently happen in waterfall declines of stock market crashes. So I can tell you that all three of us. Oh, go ahead, Mike.
I want to add one quick comment here. When it comes to the portion where you say, so what should we actually do? The plans. I mean, I do all of the things I hold. I don't sell my precious metals. Build cash. I have done that right now. I've got a bunch of cash sitting on the side, waiting for premiums to come down and waiting for a potential crash. But if you wait for the bottom, you'll see those premiums explode once everybody starts rushing in. And then dollar cost average. I've been doing that for a long time. So I follow exactly what you wrote here.
Yeah, there's some good strategies there, everyone. So check them out, see if they're useful to you. I can tell you none of us will be actually selling because precious metals may temporarily go down in a stock market crash. But see if that information is useful to you. So, well, on to tweet of the day here. And this is one that we all talked about before we came on the air here that we feel is important enough in light of current events that we actually want to read this to you. This is an Ayn Rand quote from her book, Atlas Shrugged. And this tweet is from Seth Meister. When you see that trading is done, not by consent, but by compulsion. When you see that in order to produce, you need to obtain permission from men who produce nothing. When you see that money or currency is flowing to those who deal not in goods, but in favors. When you see that men get richer by graft and by pool than by work, and your laws don't protect you against them, but protect them against you. When you see the corruption being rewarded and honesty becoming a self-sacrifice, you may know that your society is doomed. Again, that's a very true Ayn Rand quote. And Mike, I'm sure you have a reaction to that quote in relation to where we are today.
Well, this comes from The Money Speech, it's called, in Atlas Shrugged, Ayn Rand's masterpiece that took her, I believe, 14 years to write. When you read Atlas Shrugged, for the first 100 pages, you're going, oh my God, this is boring. It is such a slog. It is so outdated. Why am I reading this dumb thing? And then, right about page 100, this hits you. Now, this was so important that I actually did a whole video about this. And this particular section, which comes toward the end of the, this is about 5 pages. Francisco D'Anconia is at a party, and he overhears somebody saying that, oh, you know, money is the root of all evil. And then he gives this amazing speech. And once you've read that speech, you realize that a medium of exchange, but especially money, which does not leak, currency does leak, but a medium of exchange is one of the most noble creations of mankind. It allows us to deal with one another without killing and stealing from each other. It gives you a reverence for money. I have a contempt for currency, but a reverence for money. And when you get to the money speech, you just go, oh my God, this is the reason I'm reading the book. And it just sucks you in, and you've got to finish this like 1,300 page book or whatever it is once you read this. Maybe happens at page 400. I can't remember. It's a long way into the book. But this is very important. We'll put a link up here with the video, going back to the video that I made several years ago reading The Money Speech. And it's something that everybody should hear. So, Adam, have you got any comments on this quote?
Well, I've got lots of comments because, the book featured my great aunt Dagny, right? And as a current shareholder in Taggart Transcontinental, I've got a big stake in this story. But no, just a couple quick things. So Ayn Rand, she fled Soviet Russia when she was very young, literally fled illegal border crossings, getting shot at by the communist guards. And obviously a lot of her writing was influenced by the evils of communism that she grew up under, right? And she talks a lot in this book about there's 2 classes of people. There are the producers and there are the looters. And the whole story of Atlas Shrugged is the looters taking forcibly what the producers are making. And at some point, the producers just go on strike, right? And it's scary if you read that book today, because you're going to see an awful lot of parallels in today's world, where those that are trying to create value are just getting set upon by the parasites of the looters. And I live in California, and we're seeing that in real time right now, where with all the taxes, all the regulations, et cetera, we are seeing our productive class flee to where they are better treated. They're going to Texas, they're going to Puerto Rico. I mean, Mike, you had a company that was based in California and left. You know this story, right? So this is really playing out in real time.
Yes, it is. It's sad, really sad to see, because all of this has been predicted. It's all mapped out. We're just following this playbook. If for all the viewers out there, go and watch The Money Speech. It is something that you need to know. And if you haven't read Atlas Shrugged, it's still very worth a read, because it sort of maps out everything that has happened and is going to happen. And Jeff, I believe we've got a couple of tweets here that sort of tie into this.
Yes, Mike. Here's another tweet from Michael Burry, Cassandra, which is Michael Burry. Tweeting and getting in the news lately apparently has caused the SEC to pay us a visit. Lovely. What do you think of that, Mike?
Yeah, well, this is the men of the Bureau, the regulators, the people in Atlas Shrugged that slow everything down, stop business from happening. It's exactly the people that Francis D'Anconia is talking about in The Money Speech. And here, Michael Burry made some tweets saying, and he was right about the 2008 crash, and he made these huge bets against it. suffered tremendous adversity. You need to watch The Big Short if you haven't already seen it. And you'll see what he was up against to try to make sure that all of his customers, his clients that were letting him manage their investments, he made sure that they all ended up with a profit, but they all wanted to abandon him, thinking that he went through tremendous adversity. But he could see the future, and he could see it very, very clearly. And he said something about it. He made his bets on it, and he was right. And here now he says that we may have hyperinflation in our future, and the men of the Bureau show up on his doorstep to shut him up. The tweets that he had made about hyperinflation have been removed. So some of his tweets have been taken down. Adam, you had some theories on that. What do you think was going on, Adam?
Yeah, I actually think my theory proved to be right, where I had said that those tweets may have been taken down by nervous compliance officials in his firm, fearing that they might get them into hot water. And it looks like they were exactly right. They take the tweets down, and a few weeks later, knock, 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 there are those regulators at the door. So yeah, just underscoring everything you talked about, Mike, from the Atlas Shrugged, which is the heavy hand is pressing further and further on those trying to tell the truth.
Yeah, great input, guys. The next is chart of the day, and this chart is from Crescat Capital. This was out last week. I passed it around to you guys. We wanted to talk about it today real quickly, but it shows trading volumes in the U.S., all U.S. exchanges, plus all the various pink sheet and over-the-counter volumes as well, in millions of shares. And you can see that it fluctuates between, about 1 and 4 billion there until this year. And you can see how trading volumes in the U.S. on stock exchanges has just completely exploded, historic highs. What's your reaction to that, Mike?
This is just another indicator that we're in the greatest stock market bubble, the greatest paper bubble that the world has ever seen. We've got a blizzard of paper and a tiny little pile of gold and silver that it's one day it's going to try and land on. That and cryptos. This is, to me, this is another one of these indicators that says, run for your life. What do you think, Adam?
Absolutely. History is replete with this chart, right? It's an exponential chart. It is by definition unsustainable. Every bubble that we've seen has looked like this before it collapsed upon itself. I think it's easy at this point to make the call. This is not going to end well.
Well, on to some reader feedback. And this is Mattias N says, would you do a video on standards of living for today compared to the 1950s at the time you were born? That would be really interesting. That's a great idea, Mike, but you've kind of already done that, haven't you?
Yeah, well, I have. And one of the things that people don't realize is that today our standard of living is as high as it's ever been. There is a lot more prosperity. However, back in the 50s, it was distributed a little bit more evenly than it is today. Our monetary system, this wind that I'm talking about, that the Federal Reserve, because it's all based on air. There's nothing there anymore. There are no reserves. There's no foundation. It's nothing. And the Federal Reserve and the world's central banks just dial the wind up and down. But it's just this stuff that's being created. It flows into the economy. And when it does, whenever central banks and the banks create currency from nothing, it gets its purchasing power by stealing it from the currency that exists. It enslaves future generations, and it causes a wealth transfer from the poor and the middle class to the ultra rich. Whoever it has their the majority of their net worth is determined by paper assets. Whatever assets the currency flows into, when the central banks create it and when the banks create it, those assets go up. Other things, the purchasing power from the currency that's in your bank account is stolen. If you don't own those assets that are rising, everything else is just getting more expensive from your point of view. From other people's point of view that own all of those assets, they're getting wealthier and wealthier. And so I have done this. everybody's, I've got some charts on this, but all of the different income groups, the poor are getting richer. The middle class are getting richer. The rich are getting richer faster than everybody else. And that is caused simply by capitalism. And then the socialism and redistribution of wealth is causing the inequality, the huge gaps between wealth. But, your average poor person back in the 50s barely had enough to eat. They lived in a shack with no indoor plumbing and no electricity. And today, your average poor person has a cell phone. Yeah. So we are all getting richer, just at different rates. And the difference is caused by the central banks and our banking system that's based on vapor. Adam, you got a comment?
Yeah, real quick. I agree with everything you said, Mike, although I think that that prosperity is being increasingly poorly distributed as time is going on today. And I just want to give a quick nod to an interview I just did last week with Ed Butowski, who publishes the Chapwood Index, which, sort of like John Williams' Shadow Stats, attempts to be a much more realistic measurement of the increase in annual cost of living. And he tracks it for the 50 largest metropolitan areas, and he calculates it's around 10% when you factor in all of the things that people really spend their money on. And you compare that number 10% to the CPI, which the government publishes, which basically says the cost of living has grown less than 2% every year for the past 10 years. So those are hugely different numbers. And the problem is that wages are increases in wages are based upon the government CPI. So wages are not increasing nearly as fast as the underlying cost of living. So the middle class is just getting squeezed and squeezed and squeezed, which is why we've gone from back in the 50s where you could have one wage earner support a middle class lifestyle to then we needed two wage earners to do that, to now we need two wage earners with multiple jobs to do that. We're having to run faster and faster just to stay in the same place.
Yeah, true. And that's the reason I call it the CP lie. not the CPI, the CP lie. I came up with my own measurement of inflation when I was writing my book. I was on the government's websites and so on. And when you go to Social Security and these other places, you see all the different ways that they calculate inflation, and they have dozens and dozens of them. And they've all got different acronyms for them. And so I came up with my own, and it's pretty simple. I call it CUP inflation, CUPP, currency units per person. And I have a feeling the Chapwood Index much more closely tracks my CUP inflation. It's real. What's the size of the population? How many units of currency do we have? And you can sort of predict. If you were able to take everything into account, is savings inflating? Is the stock market inflating? They're only tracking certain things. They don't include the stock market in inflation. But where are the dollars that they're creating going? And so if you took everything into account in society, you would see probably an exact match to CUP inflation.
Yes, very good. By the way, it is Hidden Secrets of Money, episode 6, toward the end of that video, where Mike talks about this comparison and the difference in the standard of living between then and today. So you can check that out. We can provide that link to that video. It's also on our website. So, well, thank you guys. We're going to wrap this video up with the meme of the day. Remember, if you've not read Mike's book, you can do so for free. We'll put the link below here. So, well, Mike, what is our meme of the day?
Well, actually, there's a quote that I want Adam to read first, and then I'm going to show you the meme.
All right, I'll get through this as quick as I can. The quote is from 17th century historian Alexander Fraser Tytler. A democracy cannot exist as a permanent form of government. It can only exist until the voters discover that they can vote themselves largesse from the public treasury. From that moment on, the majority always votes for the candidates promising the most benefits from the public treasury, with the result that a democracy always collapses over loose fiscal policy. always followed by a dictatorship. The average age of the world's greatest civilizations has been 200 years. These nations have progressed through this sequence, from bondage to spiritual faith, from spiritual faith to great courage, from courage to liberty, from liberty to abundance, from abundance to selfishness, from selfishness to apathy, from apathy to dependence, from dependence back into bondage. And I got to say, Mike, that feels like it's mapping the trajectory that we're heading through at this time of history.
Absolutely. And so I want to go to this meme, and this is a modified meme. We've seen this meme before, but somebody replaced weak men and strong men with capitalists and socialists, they replaced strong men with capitalists and weak men with socialists. Hard times create capitalists. Capitalists create good times. Good times create socialists, and socialists create hard times. And it just ties so well into the quote that you just said.
Thanks. At some point, Mike, we're going to have to get Neil Howe back on to talk about fourth turning, because that's exactly the type of material we're talking about here.
Well, thanks, Adam. And thanks, Mike, for joining us. You guys, thanks everyone for watching, and we'll see you on the next video.
See you later, Jeff and Adam.
Take care, guys. It was fun as usual.